So today I'm going to be helping you guys understand how you can grow a small account using the VIX75 strategy. This is pure price action, using pure price action. So today the key points of the video is to understand the psychology behind scalping and why scalping is harder than the intraday trading and swinging, right? So then I'm going to be showing you the method of approach you should use if you are wanting to grow a small account. So being able to grow a small account, you need you to go on lower time frames, like scalping as a scalper. So therefore this is a scalping tutorial showing you how to approach it, and I'm showing you guys the advantages and the disadvantages of being a scalper. So trading on the high time frames is much more successful than trading on the lower time frames, right? The reason why is because on the high time frames there is less manipulations, there is less false signals that are generated, as much as scalping is, you get in, get out, but it's basically a psychological game on the lower time frames because the institutions are generating some false signals, making you to make the wrong decision in the market, and you're finding yourself in a loss and you're finding yourself blowing accounts. Why? Because you don't understand the psychology of what is happening into the market. So when you look in charts like the H4, you look in the H4, you look at the day one. So okay, you could spot some, as a price action trader, no indicators. You can see, okay, this is a peak over here, you can see this is a peak over here, and then you're waiting for your third touch confirmation over here on your H4. You go down on your go down on your H1, and when you go on your H1, you see what? You see a third touch on the H1, right? You see a third touch, and it's a what? It's a pin bar. Yes, it played around for a bit, but then eventually it went up, right? It went up, it went into massive profits. You would have profited and made a lot of money, but in order for you to be trading this type of market, you need to have a large amount of money into the into your trading account, because VIX75 is a very volatile market. So as a trader who's a beginner, it's understandable that you don't have enough capital, but you need to understand the risk of being a scalper, right? On the day and the daily time frames, the H1, the H4, and the day one, more likely when you're getting on your third touch or of your trend line, if you're a price action trader, it is most likely going to go on that certain direction. But if you're going onto time frames like the M5, so if let's go and let's look for example. Okay, here I'm spotting an example here. So okay, you'd see, okay, this is a you would see something, or sorry, so you see something like a third touch that is about to happen, right? So you'll be seeing a third touch that's going to be happening. So you got your first touch over here, you got your second touch, and your third touch, and your third touch you got a beautiful pin bar, and you know for a fact that the pin bar is a powerful signal that the market is reversing and now it's going to go to the upside. But what happened? Market started dropping. Why? Because of a higher time frame confluence that you are not seeing on the lower time frame. So it's really important and key for you to understand what you're putting yourself into. In the previous video, which is this video, in this video I've explained to you how to use the scalping strategy, how to be able to scalp as a price action trader, which is starting on the higher time frames, which is the H1, going down to the M15 and going down to the M5 time frame, and to be able to understand what is happening into the market. Because why? In the lower time frames, it is really busy. There's a lot of things that is happening, a lot of false signals that is being generated by the market, by institutions, and all of these banks. So finding yourself on these time frames is really important to know what you're actually doing. Scalping, you have to have a different method of approach. So when you approach the markets, first of all, you need to start on the higher time frames, and when you're starting on your higher time frames, that is giving you an advantage to be able to see and forecast the next move, right? So we're going to just mark out our zone like this. So this is current market price we're going to be analyzing, and we're going to go a little bit at the back, but look at what happened. Right, we have a beautiful zone over here. What happened in this zone? What happened is we got our our touches. We have multiple touches. So you, when you're approaching the market, you need to see or find rejections in the market, or find, sticks that are left over there. So it's a footprint that you need to follow and be able to mark out those zones. So as you can see, um over here we got our stick over here, and we got our stick over here, which we call in trading a wick, but for this presentation purposes I will make it easier by saying it's a stick. So where you find the stick over here, this is a stick, this is the stick, this counts as resistance, right? Broke out of structure, what did it do? Now it is acting as support. The floor now, it is what it is buying, going to the upside. So we are taking note of that, right? As traders, we're taking note that, okay, at this area or level there might be a possibility that market price can respect it, go into the upside, and then continue either going up or going down. So we would have spotted that. But let's say we came at the wrong time, or let's say we came later and the market already reversed and everything. How would we take advantage of a next coming move? So we're gonna wait for price to actually come and respect again this level as resistance again, right? So what happened? Same thing over here. It came and price is starting to respect that area over there. But I know a lot of traders are impatient to wait for a certain move, for it would take hours and everything. But let's say, okay, we're here, that is current market price. We're gonna go down onto M15, and when we're going down onto M15, we want to spot out a certain pattern leading to our higher time frames. So we're gonna simply take our trend line over here and we're gonna put it here, right? So now we're finding a pattern that is a descending pattern, giving us probabilities that market price might be pushing down. So once a pattern starts appearing at that level, just know that you either can go full force, or you can go in with a certain amount that you're willing to risk into your trading account, because you know for sure that the market price can play out as you want to. Because as you can see, that zone has played out majorly, and you could have made like $50, more than $100 on your account, just with the 0.01 trade, because this thing is very, very, very volatile. So if you're wondering what is the recommended account sizes for you to scalp, I personally think for you to be able to, as a beginner, you should start with $50 minimum. You should start with $100 minimum, so that you can have more chances to mess up. Because I find out when I started trading, I started depositing $10, and I would blow all of those $10, and it would affect my psychology to a point where I was starting to research what strategy was going to work, searching on the internet for something that is this holy grail and everything. But at the end of the day, what was truly working was my first strategy, which was trend lines, using trend lines, support and resistance, and being able to consistently apply those rules into my trading.